Today we kind of want to go over a quick segment about taking advantage of what's called Section 179. It's a tax break given to small businesses, medium businesses, across the country to try to take advantage of some of the tax deductions that are offered to you. So we're going to talk a little bit, kind of briefly, we're not going to go too in depth about it, about what the benefits actually are. So we're going to use an example today. You've got a business owner who, at the end of the year, has a surplus of, let's use a round number, $100,000 in the business account. They've got a couple choices. They can either claim the $100,000, and we're going to say they're in a 30% tax bracket, just a round number. In that case, they're going to pay taxes on it. So using the 30% number, right, $100,000, they're in a 30% tax bracket. We can safely say that that's $30,000, which means that 30,000 of this 100 is going right to the government to pay taxes. They're left with a net of $70,000 in capital in the account. Now, that's all well and good. You made 100, you can keep 70. The government actually gives you a better option. A lot know about it, but quite a few people really are just not familiar with the concept. It's called Section 179. It allows you to write off 100% of the depreciation on a piece of equipment purchased, whether it be financed or paid cash for, in the first year's term. So let's stick with the $100,000 figure here. You're a construction company, you got a $100,000 surplus of capital in the account at the end of the year. I don't want to pay taxes on it. You don't want to pay taxes on it either, right? But you could purchase an excavator, say, for example, right? Same cost, $100,000. If that's the case, you go and finance yourself a new excavator. $100,000 ticket price, okay? Utilizing Section 179, you finance this piece of equipment, you're allowed to write off 100% of the depreciation, which is essentially the cost of the equipment. And it does include the interest and things, but we're going to use 100,000 as a round number. And again, assuming you're still in that 30% tax bracket, right? By utilizing Section 179, you are going to save yourself the $30,000 that you would have paid to the federal government in taxes on that $100,000. So you're going to go out, you're going to purchase an excavator, $100,000. You're going to save yourself the $30,000 in taxes that would have been paid. So essentially, we can look at this in a way in which the $30,000 that you would have paid in taxes being saved comes right off the top of the price, right? So now, essentially, you really only paid $70,000 for a $100,000 piece of equipment. This piece of equipment is now going to be put to work for you. What's it going to do? It's going to generate a whole nother revenue stream, a whole new vertical of revenue coming into the business. Let's look at it in the long run. By the long run, I'm going to use, say, 2 years. 2 years down the line, right? You paid $100,000 for this, you saved $30,000 in taxes, so essentially you're really paying $70,000 for the piece of equipment. You've made yourself additional revenue, I don't know, say $50,000 putting the equipment to work over the course of 2 years. You're going to go and sell it. Now you own it. You want to go and sell it. Since you only paid $70,000 and it's only 2 years old, you could probably recoup the entire $70,000 if you were to sell that piece of equipment, right? So now you're getting all your money back, taking advantage of $30,000 in tax savings, and in the meantime, generating a completely new revenue stream, a whole new vertical. So you made yourself some money, used the piece of equipment, and recouped, essentially or ideally, 100% of what the cost of that equipment was for you. So my question to you really is, as a business owner, it seems to me like a no-brainer. It really is. You're going to pay $30,000 to the government in taxes, or you're going to use that 100 for 2 years. Save yourself 30 on it in the tax savings through Section 179. So you've essentially paid $70,000. Sell a piece of equipment in 2 years for $70,000. I think that's a reasonable offer. I think it's a reasonable price for a 2-year-old piece of equipment that costs $100,000 to recoup 100% of your money, and in the meantime, you're making money. Now, if you're an equipment finance broker, equipment finance or leasing provider, this is a great tool for you to use to not just be the guy who is providing finance, but to almost act as a business consultant for companies. There are a lot of people that do utilize 179 and really understand the ins and outs of it, but there's also quite a few people that don't. And if you do, now all of a sudden you're not just the guy who's providing financing, but you become a business consultant, you become a trusted confidant for the person. They're really gonna trust you, and moving forward, what you're doing is you're building a client for life. And in the future, by bringing these things to light, as their business grows, gets better and better, they're gonna purchase more and more equipment. What are they gonna do? They're gonna come back to you. You were the one who put the bug in the ear in their ear, should I say, for what they can save by utilizing equipment financing in Section 179. So, long and short, take advantage of Section 179. It's a no-brainer.